The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 11th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, no problem. You can let your fingers do the walking. You can always send me an email, steve@tfnn.com, and I'll get to that, of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show kicked off and started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 147 points, 25,518 is the print. S&P up 15, NASDAQ up 36, Russell up 23 points, leading the charge up 1.5%. The trannies actually leading the charge percentage-wise. They're up 205 points, trade out 11,235. Gold's up 450. Silver is down 1 penny. Light sweet crude up 90 cents, trade out at 64.46. Natural gas up big, up 5% as we speak right now. That's in the process of forming or completing or moving towards an A to B equals CD to the upside. Priceline is $1 a liter, up 25 bucks, 1.4%. Amazon is up 15 bucks, and one of our listeners sent an email. We've got Michael, Robert, the golf guy, and Tim, who wants to short Amazon. So we'll take a look at that here during the show. Pioneer Natural Resources up 8 bucks or 4.5%. Progress Software is up 7.45 or 17%. That is making a heck of a lot of progress. To the downside, it's AutoZone off $6, less than 1%. Intuitive Surgical down 5 bucks. That has had a nice move to the upside over the last several days. Biogen, BIIB, I just like saying that, down 4.60. Fizz, National Beverage Company, that's down 4.50, about 4.5%. So we have plenty to look at. Of course, I want to look at what you want to look at, and that means we're going to go straight to the charts here for the requested symbols, or whatever it might be. In this case here, it was Michael who wanted to take a look at KMI, Kinder Morgan, and I believe Michael is long. So if we take a look at Kinder Morgan, this is the daily chart, Michael. Here's what we know. This thing is trading right into the top of its daily profile level. Bullish structured profile. Top of that box is 1910. We are trading at 1908. We've had a high today of 1918. Does that mean that that price is going to stop here? The answer is no. This has an A to B equals CD pattern. Let's give on the daily chart. Let's give Michael a couple of price projections to take a look at. The one I would be using is this one. You can see it just completed the 1-to-1 today. The 1-to-1, by the way, price projection was 1916. Again, the high 1918. Does that mean it's time to sell? No. Is this a Gartley sell pattern? Actually, it could be. It's not until it tells us. How will it tell us? The only possible way that it will tell us is if we see some type of bearish reversal signal. Without that, Michael, your next price projection is 1957. Above that, it's back to the recent highs in the $20 area. That's the 1 to 1.618 A to B equals CD that would take on the September 20th level. Hear me clearly. I am not saying sell this. I am not saying sell your long position. I am not saying short this. I'm saying this has the potential to form a Gartley sell pattern. You don't form a Gartley sell pattern with a widest ranging bar like we've got today. That is for darn tootin' sure. Now, if we take a look at this daily chart, the other thing that we like about today's action, Michael, is that this equity here back on, this is Kinder Morgan, back on December 30th. Normally I call it Stevie's red line. Right now, just use the little black dots. I will, in fact, let me get the, let me not confuse you. That would be just, that would be disgusting. And I'm not going to do anything disgusting. Let's look at this chart. Here we've got Stevie's red line. Let's keep things straight and simple. What we like about what it did today, Michael, is came back and tested it, and that was shortly after that price oscillator got above zero. So this thing is in the bullish camp out here. Today was a nice bullish signal. So this says that it wants higher price until proven otherwise. I cannot predict the future, but what we can do is say what needs to happen in the future for you to get concerned. And at this stage, it's not here, not just yet. So good luck with this trade. Let's go take a look at an intermediate term time frame here for Michael as well. Let's get off of the daily. Let's go take a look at the weekly. Now, the weekly, you're going to see this is a significant resistance level. Different profile. This is the weekly chart. Top of that box, 1917. The high, 1918. Now, this box here, let me turn off price. The importance for you to see here, and this is both from the bullish side and the bearish side, is that this box has a bearish structure. So which chart is it that's going to give us the most important information? I always like to defer to the larger time frame. We suggest to you that this is a bearish structured box because the center line is much closer to the top of the box. Centers at 1842 versus the bottom at 1693. Now, when and if this is able to close above 1917, a bearish structured box will go ahead and generate a very bullish message. But as we speak right now at 112, you can expect this road to get a little rocky. That is if you want to have one of those nice little Rocky Road ice cream sandwiches out there. I don't recommend eating too many. Just know that you are up against some pretty significant resistance. That's in Kinder Morgan, ticker symbol KMI. Robert wanted us to take a look. This is yesterday. Hey, sometimes the emails that you send, the later you send them, the more difficulty it's going to be for me to get to them. Plus, what I can't do is sometimes your emails, even though I can see your timestamp on them, for whatever reason, the internet service provider doesn't get them to me until typically after the show. But that's okay. I do my best to come back to them on the following day. And on the following day is today for Robert. He wanted to take a look at GDXJ. Yesterday, he wanted to consider taking a long position in this. So let's go take a look. This is the junior GDXJ. This is the junior miners out there. We can see here today, it gapped up higher. We don't see the real gap, but with regard to yesterday's close, it's kind of where it's trading, 33.92 out here. What you'd really like to see, Robert, is you'd really like to see price close above Stevie's red line. Happens to be about 34 bucks. 33.97 to be exact out there. So you'd like to see price close above that. Are you asking me, would I buy into this if I wasn't already invested in the mining sector? Then the answer is yes. So I say, hey, go for it. Where is price? You also were talking about an A to B equals CD to the upside. You said to the 38 area. 38, not a chance. I would say your A to B equals CD on this little puppy, if it works, is not 38.51. Not the one-to-one A to B equals CD. I'm going for 39.69. And that's just in the short term. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Steve takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So for SAT, S-A-T, inside our Tigers Den, SAT would like to go ahead and short Praxair. Now, I don't know what the time frame it is that you're looking at there, SAT, so, we'll take a look at a couple different time frames. But the first thing that I want to share with you is by taking a look at the long term. Well, I'm sorry, SAT, we're going to come back to that because we got a caller on the line, and callers have a preference here during the Trader's Edge show. Let's go out to Philly and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Steve, I'm very well. Thanks for taking the call.
My pleasure. Thanks for calling. And
I trust you're also on the mend with that leg injury of yours.
Hamstring is the nastiest injury, and I went to the Moody Blues concert last night down at the Hard Rock in Hollywood, Florida. First time I've been to that Hard Rock environment. Basically stinks. I gave it a failing grade, and but in any event, I still went there. I had to stop so many times just from the valet parking drop-off to get back there because of that hamstring injury. It's like, bring out a wheelchair for me. It's a nasty injury. Nasty. I didn't. But it's.
We're going to be rolling Steve Rhodes into concerts in a wheelchair with his oxygen supply.
Yeah, I don't think so. I don't think so. But I'm looking for all remedies. The only remedy apparently out there, says everybody, is rest, and a lot of rest on that. In any event, I'm not very good at resting. But thanks for asking.
Yes, in any event, Steve, I wanted to ask you if you would share with me and your listeners your thoughts on gold, not on the price pattern, the current price, but given that we've been in a very well-defined range under 1360, 1375 the past couple of years, my question, I'm wondering, in your mind, what are the fundamental developments that you envision occurring that brings buyers into the market and drive price higher over that level? Could you share your thoughts on that question, please?
Yeah, I can, but to answer the fundamental question, to me, the most fundamental element is taking a look at the patterns, the technical patterns in whatever instrument it is that we are looking at. And the difference between, and this is a monthly chart that we're looking at, the difference between what we were looking at back in December of 2015 versus where we are at now, fundamentally, from a technical standpoint, is the pattern dealing with the price oscillator, the difference between two exponential moving averages. When that price oscillator, 19 and 39, is below its zero line out there, that's where you're never sure if the move is what you have to label that move as is a counter trend rally. And we can see that the price oscillator did not get above zero until last month, until December. That's where this change in trend, at least based upon these signals, has taken place. Now, from a monthly perspective, you and I, we like to follow Tommy DeMark's counts out here. It went to just simply a TD setup 9 count back when it just a month before the actual high was made. This was a TD 9 count in September 2016 from a monthly perspective. But getting back to what fundamentally is different, that has me believing that the bottom that we just saw was not the most significant bottom. That was the one from 2015. But now we should see some type of acceleration to the upside. However, there is one piece of jet fuel that is missing out here. So this could be sideways for a bit. It could be coming back and forth. But on this chart, on this monthly chart, what we like to see when that price oscillator gets to zero is we like to see price come back and test Stevie's red line. And a successful test is test it, close back above it, and start taking off from there. And that's what we have in December. That's what we have in January. In order for this to really get fuel, you and I need to see traders around the world for it to really pique their interest. And there's two sets of traders you and I want to see. Those are the European traders. And in order for them to get their interest really peaked out here, what we need to see is gold priced in euros break out. Gold priced in euros has not broken out just yet. If we take a look at gold priced in euros, as soon as I can find this chart, it was here just a moment ago. Here we go. Gold priced in euros. This chart here, the very bottom panel, shows that we have not seen the true breakout. The breakout would be getting above the close from October 16, 2017, or the close from November 8, 2017. And right now it's turned down. And even though we have seen the breakout in U.S. dollars, we need the other traders to see the breakout as well. And typically, gold priced in euros is a leading signal for us. That's why it's a little concerning, just a little concerning right now. Price could bust through there at any point in time. Right now, that dollar value, gold price in euros, is about 11.06. The other thing you and I want to see from a longer-term perspective, we're back to the monthly charts now, but we're taking like a gold priced in euros, which has still held the rising trend line, so that's good. We also want to see gold priced in yen bust out, and that's above that little diagonal red line in the center panel out here. Price basically hit it so far this month, but boy, if price can break above that declining line, then I think fundamentally that's what we have. We get traders that pile in that say, hey, gold is breaking out in their currency, and then I think we've got the move to the upside. So does that help you to kind of see what it is that I'm looking at?
It does. You were real thorough. That's exactly what I asked you for, so I appreciate that. One last thing I'll share with you.
Yeah, because I'm going to ask you, take the other side of the trade. Take the other side of that trade. Tell me why maybe gold doesn't break out. Because I know you've thought that through too, I would think.
Yeah. In fact, I'm looking at TigerTV at gold priced in euros, yen, and dollars.
Yes.
On your chart work there, and I'll share an observation, namely
yes.
this. I was thinking about and shared with people in the Tiger's Den, starting back in October, two scenarios for the gold price, and both included a decline into the first week of October, the China Golden Week, and then another decline into just after Thanksgiving, coincident with the expiration of COMEX gold call options and the delivery window for bullion against the COMEX futures.
Yes.
And then a rally in either scenario. So we've gotten a rally thus far. So far, so good. Now
Yes.
we're at a decision point, as I see it, where I'm waiting for the market to tell us, because there is a bear scenario that I was thinking about back in October, and that was a rally in December, January, perhaps February, March, that holds under last Labor Day's high up at 1360.
Sure.
And if we rally and don't exceed that high, there is a bear case for a decline back down towards that 1240 level. So just
Absolutely.
to share that observation.
All righty, perfect. Hey, thanks so much for calling, and thanks for sharing that. We're about to go to a hard break. So, again, thanks for calling. That was John in Philly. Steve Rhodes with TFN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Yeah, so the Moody Blues now, they're celebrating their 50th year on tour. I've seen them for 43 of those 50 years. Now, we'll say that, which means that really I've seen about 20-plus shows that they've done. Really, has typically always been one of the best value concerts. Because typically they play for about 90 minutes, take a intermission, and then come back and play for another 90 minutes or so. So and they've got enough music to do that. But first of all, the sound has got to be great wherever you go to see it. And this sound inside this environment basically sucked I could not believe that this was a Hard Rock Cafe or a Hard Rock namesake, and that the sound was just so horrible. But on top of that, they really weren't that great. Hey, age is catching up to them, just like it's apparently catching up to my hamstring muscle. One last thing with regard to gold. Here is the gold contract, continuous contract, quarterly chart is what we're looking at. And what we can see here, bullish case scenario is we get a breakout above the descending trend line out here. The bearish case scenario is you get a break below the rising trend line that is shown on this chart out there. With regard to how are you going to figure out what's going on intraday, so to speak, you just simply come back and take a look at what's going on inside the market profiles. And if we take a look at the long-term profiles, what you want to be watching as we speak right now is the daily. Watch the top of that box. 1327 says we're back on our way up to that September time frame, little swing point that John mentioned. That would be between, looks like about 1351 to 1366. Look for support to be at 1302. If 1302 fails, says you're headed lower. You say headed lower to where? Well, could be 1288, 1266, along those lines. We'll take things one step at a time. Now, we were taking a look at Praxair, I believe. So let's go back to our 3 time frame chart here, Praxair, and for SAT inside the Tiger's Den. What I want you to do is get your head wrapped around the longer term pattern first. Just start there with regard to something that you want to go long or go short, and try to figure out longer term what the patterns are. As I look at this monthly chart, to me there is a clearly defined A to B equals CD pattern. The A point starting back here in 2008. November 2008, 47.40. The B point out here for me is March of 2014, 135.25. Volume there is 26 million. We like to just simply say, hey, when that level is passed, what is it passed with? Well, it was passed with 27 million. 27 million going after 26 million. It's passed with volume. That's what you like to see. And therefore, you now have it confirmed A to B equals CD to the upside. Longer term in Praxair, where the 1-to-1 is 183.44. There ain't no way that is where price is headed to, the 1-to-1. Praxair long term headed to 207.0237. So then I throw that out to you. If that is correct, if that's a correct assessment, which at this stage, that's what the evidence shows us. If you knew that to be the case, because I would say if you're going to short it, where is this going to fall back to? Or do you short it? Do you just simply say, you know what, this has got a longer term breakout pattern. What I should be doing is hoping, praying for some type of retracement that you could buy into. So that's the longer term chart. We do that here. You and I have been looking at the longer term charts for the S&P, for the Dow, for the Russell 2000, for the New York Stock Exchange, for the NASDAQ 100, right? 8,500, 8,800, that's the confirmed pattern. The IWM has a confirmed monthly A to B equals CD that takes prices up to the moon. That doesn't even get to the moon. We're not even at a moonshot just yet. So what do you want to do? Do you want to try to short it and get run over? Or do you say the longer-term trend is to the upside? In the case of Praxair, PX is a ticker symbol. Its longer-term trend to me is to the upside. Hey, you might have a shooting star candle as we speak today. This thing has so many A to B, so many stair-step patterns to the upside that I don't know whether it's going to give us an indication of a pullback. Let's put PX up on the chart right here. Let's go look for Stevie's red line. This is the monthly chart. Look at this monthly chart here for Praxair. John and I were talking about gold and the importance of gold or any long-term chart getting above its zero line in the price oscillator, the very bottom panel, which is exactly what this thing did back here. Looks like in about October or so, September 2016, October. Look at how price just dances along Stevie's red line. Basil uses a 9-day moving average. This is not a 9-period moving average out here. But either way, both of them are giving you, I don't know about the 9 periods. I don't have that on my screen. But I can tell you that this is exactly what you want to see in order to be bullish Praxair on a long-term basis. Now, it works the same way on different time frames. If we look at the daily chart out here, daily chart, maybe price pulls back to 160, 103 just to test Stevie's red line. If you can get below that and you're short, and I'm not saying to go short. I'm saying about as clear as I can, no, you want to look at this from the long side. And maybe this is going to pull back, and you would be very fortunate to get a pullback to 152. That'd be about 10 or 11 bucks to the downside. Someone might say, hey, there is a monthly peak D, a monthly now wait, I'll just go back to it. Just because we get a Tommy DeMark, and there is not a Tom DeMark 13 count that I have on my system out here, on the SPX. You know what we talk about that. The counts don't mean you go short. Okay, you see a TD9 count, it does not mean you go short. You have to then say, okay, this is a candidate for a short. Let's go take a look at some other elements out here. On this monthly chart for Praxair, here's a TD9 count. That didn't mean you go short. Look at price just dancing along Stevie's red line out there. When you get an A to B equals CD, a completion of an A to B equals CD pattern, that does not mean you go long or short, right? If it's a buy pattern to the downside or it's a sell pattern to the upside, that does not mean you go short. If you get a seventh wave move, that does not mean you go short. Not necessarily. You have to take a look at other conditions out there. And so, but these patterns are helpful for us to identify where there are potential turns out there. So, but thanks for noticing the S&P, but it does not mean that you just simply, okay, I'm just carte blanche going to go ahead and take the position, whether it's long or it's short out there. So, Sad, I hope that helps you out. That is just one person's opinion, but I do believe, I just ask you before you go short, go take a look at the weekly and monthly if you haven't, and come up with your price projection as to where that is headed, and then start taking a look at the reward risk that is out there. The golf guy wanted us to take a look at ticker symbol CX, and CX is CMEX. SAB out here. So when we take a look at this, and I apologize, I don't recall if you were looking from a long or short or what have you. If we take a look at CMEX, here's what we know right now. There's two resistance levels that are very clear to us, whether you're long or looking to get long, where you want to see price get above. And that's going to be the $8.02 mark. That's the daily profile, top of the box. The weekly profile, top of the box, is 804. And if price can clear that, then it's back off to the races. Now, this thing here has formed a bottom. We love when things form a bottom out here. So let's go take a look at CX, see if there were any signals out here. This is the monthly chart. We'll go ahead and, well, on the monthly chart, was there a signal? On the monthly chart, what you really need to see this do is close above 819. A close above 819 says you're headed higher. Steve Rhodes with TFNN. We come back. We'll go take a look at the daily chart for CX. We're going to go take a look at Platinum for Ruby. We're going to look at Amazon for Tim. And, of course, I want to look at whatever you want to look at as well. Steve Rhodes.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're taking a look at CMEX. CX is a ticker symbol. That's for the golf guy. And here's the daily time frame chart right now. And as we take a look at it, everything looks pretty good with one exception. That exception is this price oscillator is still below zero. So all we have as we speak right now, golf guy, is a counter trend rally. We want to see that price oscillator get up above the zero line. Then we want to see price pull back, test that red line, and then it could be off to the races. I don't really see an A to B equals CD pattern, a good one that we could draw here. It does look like it wants higher price at this stage, but it needs to be able to clear 804, 802. If it can do that, then you're looking at price getting up to the 834 level out there. So thanks for writing in. Sorry that I couldn't get to it yesterday, but hadn't seen it. Now let's go take a look at, for Tim, wants to look at Amazon. And what Tim would like to do in Amazon is he would like to short Amazon as well. Now, he didn't say he wanted to necessarily do it today. He was looking for a spot. If we go help Tim try to find a spot, first, this is the weekly chart for Amazon. We're going to go take a look at the monthly in a minute. Here's what we know about the A to B equals CD pattern in it. First of all, the one that I've chosen is the conservative pattern. That's the one that starts off at 710.10, gets a, and that's back on the weekly basis of November 14, 2016. Makes sense that that's an A point. If you take a look at the B point, July 24th, 2017, 1083.31, makes a 40% pullback. Does that on September, or the week of September 25th. And the B point gets passed with wide price spread. Was it accelerated volume? Well, it was 31 million compared to 27 million. So Amazon now has a confirmed A to B equals CD to the upside, Tim. And that A to B equals CD to the upside, the one-to-one is 1304.96. And just like Peak D in the den said, hey, Steve-O, just because it gets to a one-to-one A to B equals CD does not mean you sell it. And he is exactly right. And you would not be wanting to sell this, certainly on a weekly basis, at 1304.96, because this more likely is headed to 1406.47 or 1535.60. This has the probability. This is one of those 40%ers that says it wants to do more than a one-to-one A to B equals CD to the upside. We take a look at this monthly chart out here, basically virtually almost impossible to draw the A to B equals CD pattern. We can do it, though. We can do just about anything. And if we take a look at where the A point would be here, to me it would be, looks like October 2014. That would be the spot. Your B point out here, December 2015. Your C point out here, February 2016. So as we go ahead and we type those in, you're going to see on a monthly basis, holy goodness gracious, this thing is already above the 1 to 1.6. When it headed to the 1 to 2 level, 1298.88 out there. with nary a bearish sign at all. Does this mean the price can't go any higher? No, it can. The next level is 1553.77. But in this case here, Tim didn't want to look at these charts. What Tim wanted to look at was the horizontal trading ranges. So I think I've pulled that chart out here, and he wanted to know where those next levels were. And if we take a look at horizontal trading ranges, and what this does, folks, is this calculates the largest number of co-located, don't we like to say that? Co-located, doesn't matter whether it's an open or a close. We look at the body of the candle because that is the essence of price, and we try to identify where the largest number of contacts takes place. In the case of Amazon, it's not 1276, it's not 1139, it's not 865. It's 44.29. Yeah, so this system is generating or calculating these horizontal trading ranges with using 44.29 as its first level. Looks like level number 2 is 318 and change out there. As we take a look at the horizontal trading range boundary lines, Tim, the number that you want to keep an eye on is 1413. That's where it looks like price is headed to. It could have a little bit of a stumble out here right now because it's right in the midpoint of the of that horizontal trading range. It's between 1139 and 1413. It's really the monthly chart that's giving us the better data to take a look at. But now we've got confirmed A to B equals CD patterns to the upside in Amazon. And if you like horizontal trading ranges, which I don't like them, I love them. This is giving you the next price projection of 1413. So I say keep those shorts on, but don't short anything. And if you're not in Florida, then don't wear shorts this time of year. It could be damaging to your health. So now we've gotten through just about, we didn't get through the platinum, PPLT, and that was for Ruby. So let's go take a look at PPLT. Let's actually look at platinum first. PPLT is the ETF for it. So let's go to see what platinum is doing. Ruby, I don't recall if you're long, if you're short, or what you're looking for. If you hear me right now, maybe you could just type it in on my screen. That'll make it easier for me. And if not, I'll just kind of give you the rundown of what it is we're taking a look at, or what I can see here on platinum. Now, I don't have my synthetic contract for platinum, so we're going to look at the that can't be right. Is that right? What's the current active month that Denner's out here for platinum? Is it, I don't think it's January. Is it February? Is it March? Anybody know? Let's put up the February. Let's see. That's not right. That's for sure. Let me put up, maybe it is January. Let me see here. My apology for not knowing off the top of my head. But, yeah, it is February. It is January. So let's come back here. All I had to do is just take a look at price movement. So when we take a look at platinum out here, and we try to figure out what it's doing, and we take a look at market profiles, can they help us? They can. What this would suggest to me out here, Ruby, is that this looks like it's headed for the 998.40 level. But let's just simply, I'm going to move over into the ETF structure for platinum PPL2. See if I can get a little bit better read for it. This is the daily time frame chart out here. You can see that nice little Tom to Mark set up 9 count out here that formed when it did form a bottom. That was on December the 14th out here. So that was nice. We can see that the price oscillator in this ETF has gotten above the zero line. Did that way back on January 4th. What I can share with you is at some point in time here over the coming trading sessions, could take more than 4, 5, 6 trading sessions, we ought to see price for PPLT and Stevie's red line catch up to each other. I don't know if the red line's going to rise, if price is going to pull back, if it's a combination of both. I just know that that is the typical pattern that takes place. If I go from the daily to the weekly out here, just so it looks like, didn't look bad, but if we put up the weekly chart out here, and we're looking for, what are we looking at? What are we looking for? Let's just come back and take a look at market profiles. Let's go see if they provide you with any piece of clue. PPLT, and this way we'll take a look at the daily, the weekly, and the monthlies out here. So the daily, nice message today above its daily top of the box. I would have to say, based on what we're looking at, price is either headed to 95.30 or back to the swing point from September 4th, 2015, and then you'll just simply have to reassess from that point forward. Now that takes care of, I think, all of the questions that came in, with the exception of, well, at least one. As I take a look over here, now just on my laptop, I see Tom wrote in, said, "Good afternoon, Steve," and I'll say, "Good afternoon, Tom." And when we come back from this break, Tom, I will go ahead and take a look at, for you, an entry point into USLV. He's thinking around 1140. I think he's got this thing pretty well nailed. Well, let's go see if we can provide him with any other information. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Tom wanted to enter USLV at 11:40. And if we take a look right now at 1:54 in the afternoon, Stevie's red line number is 11:41. We've seen a test and rejection of that. That is what you anticipated was going to occur, just like we took a look at platinum. Price pulled back to Stevie's red line. At this stage here, as long as price closes over 11:41, then, Tom, that was your buy. You're at 11:56, not that big of a deal right now. So you have the buy out there. If we take a look at, in essence, the underlying instrument, silver doing the same thing today, testing and rejecting Stevie's red line. You'd like to see price close above 1692 as we speak, or it's 1698. So at this stage of the game, all looks well. So nice call on you with regard to a number. You are right on, brother. Now we have one more request, and that's for Harley inside of the Tigers Den. Let's take a look at Whiting Petroleum out here. If we take a look at Whiting Petroleum, hey, on the monthly chart, you know, this thing's been consolidating between about $57 and $18. That's quite a consolidation right now, trading out at $30.14. Price is over the monthly horizontal, the monthly TAS market profile. So that is short-term bullish or long-term bullish, perhaps. If we take a look at the weekly time frame chart out here, this week may have an A to B equals CD to the upside, right? So we're just kind of going backwards to forwards, meaning we're taking a look at longer term to help us with the shorter term. In this case here, the volume of that B point at 28.58, you're 30.12. That had 42 million. You're at 20 million as we speak right now. We're really not even halfway through the month. If this volume continues as it does, then Whiting Petroleum is set up for 34.14, more likely 37.59 to even 41 buckaroonies. That's coming from your weekly time frame chart. Let's finish this thing off looking at the daily. The daily price is now above the most recent swing point. Another potential A to B equals CD. The date of November 6th, that was 8 million shares. You're at 4.5 today. A little light in the loafers. The day's not over. Whiting Petroleum looks muy bueno. Speaking of very good, up next, your favorite polar bear in mind, David White. After David, muy bueno. Tom O'Brien, 3 to 5. Andy Heck from 5 to 6. It doesn't get any better than that. Stay tuned, folks. And I'll see you on Fantastic Friday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.